Hmm. Well, the focus of what we do is Bitcoin. I think now would be a good time for us to get into the difference between Bitcoin and everything that's not Bitcoin. And I'll just use a term, I guess, crypto for everything that's not Bitcoin, because inevitably, when you have a conversation with someone about Bitcoin, you say something about Bitcoin with someone you may or may not know, they will always bring up some other random coin. It's
Sure.
almost a guarantee. Like there's Bitcoin, but there's this other thing. And in reality, not investment advice in any way. We have to say that we do not give out investment advice. But in reality, Bitcoin is unique amongst the 20,000 plus coins. There's nothing else that's like Bitcoin. Not even close.
Absolutely. Yeah, and Bitcoin is really the only one that you could consider to be a commodity, compared to these other coins out there. I think a
Mhm.
lot of these coins are really nothing more than unregistered securities in a way. They are a piece of a technological platform that, um, may claim to be decentralized, may claim to have some of the characteristics that Bitcoin has, but when it comes down to it, they're really not the same. And the difference is that there's two things that I see, that really differentiate Bitcoin. Um, the first one is the the fact that it's got, I mean, it's the first. It is the first of all of the cryptocurrencies. It
Mm.
laid the groundwork. Most of these coins in some way are, you know, the code that they run on is very much, based on Bitcoin for a lot of these. We know that's certainly the case with Ethereum, and most of these tokens are Ethereum based. So
Mm.
you've got, kind of an adaptation of the original Bitcoin code, but you don't have with those is the world's most powerful computer network securing it. And so the
Mm.
network is what creates a lot of the value. But then when you, layer on the proof of work consensus mechanism and the difficulty adjustment, it really makes it an entirely different asset than any of these others, because with such great, accuracy what the issuance schedule is for Bitcoin. And
Mm.
that, even though, it may not always be every 10 minutes, over time, every 10 minutes, a new block is going to close, and it's going to be, uh, validated by the network, and it's going to be placed into a block, you know, eh, with proof of work attached to it. And whichever chain
Mm.
has the most proof of work is the one that's valid. And so it makes it very, very difficult to change any transaction within the Bitcoin ledger. Whereas with a lot of these other coins, you can roll back the ledger if you want to. You can't do that with Bitcoin. And so we've seen it happen. We've seen it happen with Ethereum. There
Mhm.
was an instance where there was a bug in the software and someone exploited it, and some programmers said, "Up, nope, do over," and they rolled it back as if it never happened and fixed the code, and and they erased those transactions. Well, some people might say, "Oh, that's a good thing because you stop people from getting hurt," but the reality is that that's not a decentralized form of money, or decentralized, network. That is,
Mhm.
the absolute ability to change the uh, the history of the database, more or less at will. And so all of these
Mhm.
allow you to do that. The issuance schedule is, we don't know with a lot of these how many, tokens there will ever be. We don't know how many were mined before, they kind of went public. So how, what, what stakeholders are there that are holding these huge quantities of coins. And then with a lot of these, when you get into the proof of stake consensus, really all you have is nothing different than the existing monetary system, where the ones that have the most, uh, assets make the rules.
Mhm. I mean, when you look into Bitcoin, you really start to understand it. It's I think personally, it's just quite a marvel just to think through all the parts that are there and see how they all work together and the genius of Bitcoin. And then when you see the other things in the crypto market, they're all just cheap knockoffs, cheap replicas that don't have any of the the essence of Bitcoin, like they look and run sort of like Bitcoin, but the fact that I don't really think that any of them are truly decentralized. There may be some decentralization to some of them, but Bitcoin is the only thing that's truly decentralized and also does not have a board of directors or a CEO or anybody that's really one person or one group that's determining the direction of it and the course of it. It's really autonomous in many ways, even though there are, I don't know, hundreds of thousands, if not millions, of computers supporting this network.
That's right. I think that over time, I think more people will come to understand the difference. And I think that when you even see a lot of the regulations that are being proposed around all of this, you can kind of see some of those differences being highlighted where, um, most recently we saw with the proposed legislation from Senators Lummis and Gillibrand that
Mhm.
they're looking to have the commodities board regulate Bitcoin, which tells you something because they're not saying that Ethereum or Solana or Cardano or any of these other coins that have some following are commodities.
Yeah, I don't know what the government is really going to, what the governments around the world are really going to do with Bitcoin because there's really not much they can do to stop it. And when I say stop it, I don't mean that they can't curtail some of the use in their countries. They can't make things difficult. I mean, they are not going to stop Bitcoin from running. No
No.
one's going to stop Bitcoin from running. We heard something from a good friend of ours who helped me conceptualize this and just said that every 10 minutes, Bitcoin is going to come along and put down another block, and there's nothing you or anyone else can do to stop it.
That's
And
right.
when you realize that you have this machine that is sort of kept alive, it incentivizes humans to keep it alive with monetary rewards. And in many situations, there are significant monetary rewards. So people spend, oh, I mean, billions of dollars with these. The amount of money spent on Bitcoin miners worldwide right now is billions of dollars, and in the future probably be even more. And you also have Intel making chips now for Bitcoin mining. I believe Samsung just came out
Samsung
with
just
some.
announced, yep, they're going to be
Mhm.
making a chip that is supposedly extremely efficient and you know not as much of a power hog as some of these other
Mhm.
ASIC chips. But yeah,
Mhm.
you're going to see major chip makers coming up with ways to make Bitcoin mining more efficient because
Mhm.
ultimately the goal of Bitcoin mining is going to be profitability. And so if you can have a more efficient chip, if you can have cheaper energy, if you can have otherwise wasted energy, if you can make deals with electric companies to help support their grid by buying the excess power at cheap prices, all of these things are going to continue to help Bitcoin evolve and in my opinion can really do some amazing things for society just in terms of energy and the ability to transfer value instantly.
Yeah, it's funny that we both have similar thoughts on the Bitcoin energy thing. So the FUD around Bitcoin energy is that Bitcoin's an energy hog and Bitcoin's going to boil the oceans and Bitcoin's bad for the power grid, et cetera, et cetera. In reality, it's the opposite. And we went over that in one of the earlier episodes, but the more you understand it, the more remarkable it is that almost everything you read is not true or hasn't been well thought out or just simply garbage intended to misdirect you and mislead you. And I was reading something earlier today about the Texas power grid,
Mhm.
how the miners there are buying the excess, but when the grid needs power, the miners just shut down.
Right. They have agreements in place that just say,
Mhm,
okay. And the interesting thing that and I'm really fascinated by this whole
mhm,
dynamic and
mhm.
and it
It
took
is interesting for
and
sure.
it took me a little while to kind of understand that the facts around power companies have to be built around peak usage.
Hmm.
Because if demand goes up, you have to have the energy available for the consumer. And so if you've got an average amount of usage, which is less than the peak amount of usage, as it always would be, your average will always be less than your max.
Hmm.
Um, then if you're able to sell off the difference between the average and the peak, but use it when you need it, you've got a really kind of symbiotic relationship there between the miners and the
Hmm.
power companies and the consumers, because now you're allowing the grid to be more stable because they're generating more energy, and a piece of that's getting scooped up by the Bitcoin miners. But if demand increases, the energy companies just say, hey, per our agreement, we're going to raise the price of this amount of energy and you need to shut down. And that is good for everybody because the Bitcoin miners aren't going to pay, they don't want to pay
Hmm.
more for the energy. They'd rather just not mine the coins if it's going to be unprofitable. So it's one of those situations where you're better off doing nothing than mining at a loss, or at a lower profit. So they'll just kind
Hmm.
of hit the pause button, let the energy companies sell off what they need to meet the peak demands. And then when that demand subsides, they'll say, okay, you can power back up. And so it's a
Hmm.
really kind of elegant way to keep that in check.
So here's something I didn't understand that hopefully would be of value to our listeners. And correct me if I'm getting any part of this wrong. So a power company can't just increase or decrease how much power they're making with like the flip of a switch. They want
Correct.
they want to it I don't know the details of how that works, but I just know that it's just not something where there's a dial that say, okay, we need more energy, just, turn it up to
Crank
11,
it up. Right.
right? So the way it works is like, let's just say that the max, we're just going to use fake numbers here to keep the math easy. The max that your uh, power center can generate is about 1,000 watts. Your power plant can generate, let's just say, about 1,000 watts an hour. But the demand for the area that you supply that power to, and let's keep in mind that electricity doesn't move across the country. It's fairly local. Like electricity can only move, I don't know how many miles
So
it
far,
is.
yeah.
Yeah, it
It
might be
starts to
max like 500
dissipate.
miles, right?
Yeah, you can't really store it or transport it very
Right.
effectively.
And that's the thing to keep in mind, is that you can't really store it or transport it very effectively unless you're using batteries. It's not like these power plants just have a way to keep an inventory of excess power there. They basically, it's use it or lose it. And a lot of them lose it. A lot of it just gets just converted into heat.
Mhm.
So what the Bitcoin miners are doing, they're saying, okay, your normal usage is 800 watts an hour, and your power plant is producing 1,000 watts per hour. We will take that extra 200 watts per hour and we'll use it, and we're going to pay you for it. But if you ever need more, if you ever need to go up to 1,000, we will just simply shut down our machines for you for your peak. And then when the peak is over, we will pick up the extra leftover, whatever that may be.
Yep.
Is that about right?
It's about right.
Mhm.
And so, and a couple other things that this does, and look, this is assuming that the miners are the ones that are doing this work. I could see a case, down the road where you see the power companies themselves starting to mine Bitcoin. Um, but either way, um, whatever extra revenue is generated by those power companies, it is excess profit for them, but it's also working capital and the ability to take that money. So if you can only sell 800 watts on average, and now all of a sudden you're able to sell 1,000 watts consistently, you've just increased your revenue by some percentage. And it won't be, it's not linear because you're going to sell that last 200 at a
Mhm.
lower price, but you still have revenue that you wouldn't have otherwise had. So now you can take that money and reinvest it into your own infrastructure. You can actually improve. I mean, we've got issues in this country with the power grid. We know that
Mhm.
a lot of really high population areas and high demand areas, they face rolling blackouts, brownouts, all kinds of
Mhm.
issues, where they're scrambling in some cases. We've seen it in Texas, we've seen it in California. But if by generating this extra revenue, they now have the ability to make more capital investment into their own infrastructure and make their own operations more efficient, it could kind of boost the entire industry.
And also for the community, there's a boost for the community because you can now have a larger power plant. You can have a power plant that can operate at its max, or it's whatever the most efficient, most cost-effective and efficient level is for that power plant. And then there'll be a taker of that extra energy. And because as a taker of that extra energy, and because that taker will turn off when you need it, your community will have extra power when it needs it. So you don't have these rolling blackouts when it's 110 degrees outside, when people need air conditioning most, or when it's negative 10 degrees outside, when
Right.
people need heat most, although heat obviously comes from different sources, but it's the same kind of thing. So there's a real benefit to the community there. And that's also something that's unique to Bitcoin, because most of the Ethereum tokens are run in data centers like AWS or Google or Microsoft Azure.
Right. And those are, and when you, even in the ones that are proof of stake, which Ethereum is not yet, but
Mhm.
they say sometime soon, who knows? But any of those altcoins are being run on centralized data centers that also have a tremendous energy use, even though they're
Wow.
not, they're not necessarily spinning numbers to create a proof of work consensus. They're still using plenty of energy. And so, again, I understand why you hear this environmental, hate against Bitcoin, but the reality is that when you compare that to pretty much any other industry that uses energy, there's really, it's no worse than any of them. In fact, it's better in
With
most cases.
it's better and actually has positive uses for society, and that's, if we're talking about the differences between Bitcoin and the other ones, I don't think most investors or most people who want to buy Bitcoin really care about the benefit to the community or to the power grid that Bitcoin may have. I think a lot of people might be environmentally conscious, and I know that both of us are big lovers of nature and want the world to be a very pretty, beautiful place for us to go hiking in and to enjoy. And Bitcoin is a net good in that area. So it's I'm not surprised that all the news is wrong, because news is usually pretty wrong about most things. I mean, I would say for most people, there's actually a name for this phenomenon where you read an article about something you really know, and you're like, wow, they got everything wrong in this article. And then you jump to another article and you believe everything that's in that article. And the reality is that the people who are writing these articles don't really know the subject matter. And I know that anytime that I've been part of an article or been quoted, I've been surprised how many times I've been quoted and they get the quote wrong.
Sure.
So, Bitcoin is a net good. It is different than all of the other cryptocurrencies. And what I'm hopeful of during this period is that this shakeout of the crypto market uh, helps people refocus and understand that there really is only one. I understand that some of these projects might be something, and I think this is something I'm stealing from you. I think you told me one time that all of the altcoins are like penny stocks.
Mm-hmm.
And people aren't really super hyped on investing in a penny stock. They'll buy a piece of junk on the Nasdaq without really thinking about it because their friend told them to. But once you start to hear the word penny stock, then people start to freak out a bit. Like they're not super comfortable with that. And these other coins are really just kind of penny stocks. I mean, you can't have. We have a gold rush going on right now. We'll call it a crypto rush, and there are 20,000 or so other projects that are out there. Realistically, how many great companies did the internet bring us? 15, 20. Most people could probably only name 5 or 6. So, and during I remember the dot-com boom in the late 90s, early 2000s, you knew a lot of these companies, and these companies were listed on NASDAQ, were just going to fail. I mean, it was just,
Sure.
it was kind of a joke, but you never know which ones. I mean, nobody predicted that Amazon would be the monster that it is now. I mean, it was a bookseller.
Right.
I saw something recently. You can buy a pet on Amazon. I didn't look into it, but they're getting there's very few areas which Amazon is not touching currently, and or have plans to expand into. So no one saw Amazon. You know who a really big player was back then was Yahoo.
Yahoo was, yeah, and that was, pre Google days, and so
Mm-hmm.
I think they were in terms of search, they were certainly
Mm-hmm.
the leader for many years. Um, but yeah, there really were a lot of companies, and I would say in the call it 98 to 2001 timeframe that some of them had huge market caps, some of them had founders and investors who made many times their money,
Mm-hmm.
um, and by around the end of 2001, a huge amount of them were gone. So I think you see some of those similar dynamics here, where you know, there are very few projects that really have the fundamentals to make it in the long term.
And nothing is even close to Bitcoin. So I would say for our listeners that anytime you hear what's the difference between Bitcoin, like why not just get Solana? Solana is like, I don't even know what it is, a couple cents a coin, if that, I don't even know. But whatever someone tells you, maybe you should get. My advice to everyone is I never tell anyone what to buy. I tell everyone to go study Bitcoin. Just go study Bitcoin. Study it. After you study it, you can make a decision on what you'd like to do. And I know when I got into this and I started, while my primary focus was Bitcoin, you still see these other coins that are going up so rapidly. It's just human nature to say,
Sure.
I would like a piece
I'm
of
going to
that.
jump on
And I'd
that.
like,
Yeah.
yeah, I want to, that's just being intelligent. If you see something that could be beneficial to you. But, and I always heard they're all garbage. They're all garbage. Just, from the good resources that I was consuming, it was always just, it's Bitcoin and everything else is pretty much garbage. And now that time has gone on, and we've seen this thing happen with Voyager and Three Arrows and Celsius and Terra and Anchor and who knows who else. You realize that it was much worse than you really thought it was to begin with. While you thought those other things were penny stocks, people were doing crazy things with them. They were leveraging them, they were lending them. They weren't treating them like they were this crazy speculative, I'll call them penny stocks again, that would just kind of worthless. And then it happens and everything crashes. And
And it happened
unfortunately,
fast. It's
fast. I mean, it happened like it's been a matter of weeks, right?
Yeah.
Just
I mean,
almost everything changed.
as far as Luna and Terra, I mean, that basically went from, you know, Do
That
Kwon
went from
buying
them saying they're going to buy $10 billion
10
dollars
billion,
worth of
right?
Bitcoin to being gone in
Yep.
like a few weeks. And they pulled down. There were a lot of people. I know Three Arrows supposedly had a lot of Terra.
Couple 100 million they lost in that deal, I
Hmm.
think. Um,
And there's a
yeah.
guy, believe Mike Novogratz.
Mhm.
He was one of the early Bitcoin guys, and he's got, and I might be getting this wrong. I know I'm getting half it right. I think he's got a Bitcoin tattoo on one shoulder and a Luna tattoo.
Luna.
I know he
Yeah.
definitely has a Luna tattoo on the other shoulder. So this guy's been around. He was a hedge fund manager. The he's probably in his 60s, I'm guessing. He's been around for 30 to 40 years. And he was such a big believer in Terra that he got a tattoo of that. So anyway, I think it's important that people understand that while they see all these prices going down of all this crypto and they hear about the crypto winter and all this stuff is melting down, a lot of that meltdown was inevitable. Unfortunately, it does affect the price of Bitcoin, although people are able to pick up Bitcoin at a cheaper price. There's a weird thing that if Bitcoin was trading at 60,000 a coin, going to 70,000 a coin, well, let's just say this. Let's just use this thought experiment. If Bitcoin is at 20,000 or so today, and then over the next month, it runs up to 60,000, triples over the next 30 days. People will be rushing to buy it at 60,000. Be a frenzy, a feeding frenzy at 60,000 because it's tripled in a month. However, not that many people are interested in buying it at 20, right? Not that many people are interested in paying 1/3 of what they would pay. Now, there's some other factors in there because obviously when you see an asset that's moving up very quickly, there's a big FOMO situation there. And
sure, you can't call the bottom.
no, and unfortunately, while people think that their investment advisors and analysts are really driven by data and logic and thoughtfulness, the reality is that much of that is driven by emotion, even when you're turning to professionals for advice.
Yeah, there's a huge psychological factor there. And I think you've seen it, and not just in this market, but in most markets where, when things are running hot, everybody wants to jump on. And when things are pulling back, everyone's like, whoa, that's too risky. I'm not touching that. So, and it's just, it's an interesting view of human psychology that says that I want to buy something when it's more expensive and I don't want to buy it when it's cheap. Is just kind of hard to get your head around, but everybody's been there. It's just, that fear takes over and stops you from wanting to buy it, even though, you could argue that it's a good price.
Well, everyone wants to buy something on the way up. People love to buy things on the way up, myself included. No one likes to buy stuff on the way down. And when something's been beaten down, there are very, very few that come along and will buy it. Although we have a friend who picked up AIG, that insurance company. AIG was trading. This is back, I guess he must have bought it in like 2008 or so. And I know that I think he put like $50,000 into it and he picked it up. I don't know what it's trading for. It may have been trading for like 50 cents a share, something like that.
Yeah.
And he told his wife, he said, we're either going to lose $50,000 or we're going to do really well. And last I checked, it was trading about 30 or so. So he made like 60x on his money. And so he saw something that other people didn't see. He's a really smart guy. And he had a conviction and he stuck with it and he waited a number of years. And that's not just hitting a home run. I mean, that's pretty spectacular.